Joining us is Ron Insana, CNBC senior analyst and commentator, also chief market strategist at Dynasty Financial Partners. And Mike Bailey is a director of research with FBB Capital Partners. Welcome to both of you. Mike, let me start with you. In the last hour, Michael Farr, another Michael, called today's market bubbly but not a bubble. So I guess carbonated but not overflowing. What's your view?
I think that's directionally correct. I think we're probably closer to a bubble now than we were, let's say, a year ago. I think the question is, will it pop? I think we certainly saw a little bit of a bubble pop in late 21. Everything was going up. There was, irrational exuberance, et cetera. We have to scroll ahead and say, well, what's going on right now? Are there real fundamental reasons driving the market? Let's go to AI. Let's look at NVIDIA. I mean, they are generating massive growth. These are real dollars. They're real huge companies are buying these chips. There's a whole ecosystem around it. So we are seeing a lot of dramatic growth out there. Mm-hmm. Yes, that is driving earnings up. That's driving stock prices up. Are we in a bubble? I don't think we're quite there yet, but I think we're definitely getting closer. And I think investors really got to be very careful about what they're buying. If they've got something that's really moved up, start to think about rebalancing. But so I think
there may be, Ron, portions of the market that are in bubble territory, if you want to call it, but others that are not so inflated.
Yeah, I mean, much of the market's not inflated, although we have seen a broadening of late. And so markets, areas of the market that have been underperforming, small caps and the like, but starting to turn higher. Bubble's a very specific word. It implies a lot of things, including public euphoria, heavy issuance of new stock, which we've not seen yet. We've seen a little bit of it starting to take place now. But,
well, there's certainly euphoria surrounding AI and
although
there's a lot. I mean, what do people go? How about NVIDIA? I mean, that's what people talk about. It's like CMGI 25 years ago.
Well, no, I mean, CMGI had zero.
I got you.
Business. Being a publicly traded company.
No, I understand that. These were not real.
Lycos that actually got sold to somebody else.
But the stock performed as though the stock was the darling.
Oh, absolutely. David Weatherall was a billionaire. I remember Sue Herrera and I sat with him at a Fidelity event and asked him what he was going to do now that he was a billionaire, and he said he was going to get a plane. So that was frothy, and that was even early. That was like 97, 98.
Yeah.
So bubbles inflating. I mean, we're in the infrastructure phase of the AI build out. We haven't reached the implementation phase, which is going to start coming, I think, in waves now. And you've talked to venture capitalists who are looking at the implications for healthcare, financial services, wide variety of different businesses. I was doing an interview yesterday at an event, and even not just the news business, but the legal business, that profession, everything's going to be touched by it. The question is, how do markets respond, and when do we see the type of euphoria that we saw between 1995 and all the way through 1999 into early 2000? I don't think we're quite there yet.
No.
It's interesting because we saw at the time in the 90s the dot-com bubble in the early 2000s, but it turns out in the long run, if you look at history, that there was a reason for that euphoria. It may have been too compressed and too focused in that moment, but over the long run, some of those ideas and the long-term confidence that the internet was going to change the world and power other companies was true, and that's true of AI. What's interesting, though, is really old-fashioned investments. For instance, you look at commodities, and what we're seeing with commodities, Ron, there's opportunity in the same kinds of investments our grandparents may have made.
Some. I mean, we've seen some agricultural commodities turn higher. We've seen copper and corn, go up in tandem. Energy has moved up a bit, although it's moderated lately. And so, I think it's like any other environment. There's usually a multiplicity of choices to make when you're looking at the investment environment. The difference, I think, between, as you say, the similarity with the 1990s is that, and I'll quote both Roger McNamee and David Faber. So Roger talked about how the U.S. economy thrives off of bubbles because we build out all this brand new infrastructure. There is a period where it crashes. In 1999, David Faber was talking about terminal values. Did these stocks reach their peak even before they saw peak profits? And that happened with Amazon. It happened with a lot. Some went out of business. Pets.com is no longer there, but Chewy is.
Yeah.
So we've seen, we used up all the dark fiber that we thought was going to lay idle for decades. Instead, it's now we don't even have enough capacity to continue building out what we're doing right now.